over this flight safely, I must say, to Mr. Ugodre, who is going to lead the panel session. Thank you very much, everyone.
All right, good afternoon, everyone. It's a wet Wednesday afternoon, so this is meant to be the most interesting part of this whole session. I hope we all agree, but we'll try and make it as brief as possible. All right, so I have a lot of questions here, so just so that we exhaust as much as we can. We know we don't have time. This is 14:53. I want us to be done here by 13:20, so that's like less than 30 minutes, right? So let's keep our responses short and straight to the point so that we can take as many questions as we can within the 30 minutes. I had a question for Mr. Ramoni, but he's gone, so I will just switch straight to Mrs. Rufai. Let me start with Madam Sek herself. So you did speak a bit to the MTN public offer and what we learned from it when it did happen. That's such a long time now. I think that was before COVID, wasn't it? Yeah, so anything before COVID is like in the olden days, as my son will call it. When my son says something that happened 5 years ago is in the olden days. So based on the data that you have so far, what sort of demographic do you guys see at the moment in terms of those investing in the capital market? Do you still see more of, the octogenarians, or do you see a lot more Gen Zs, or is it still the same?
Thank you, and good afternoon again. It's a mix of all demographics, and average age of investors at the moment is about 48 years. So in other words, the more the next gen investors invest, the lower the average age would be. Would that help? Since you asked us to keep it short.
All right, that's pretty still old, 48. But let me come to you as well, Mr. Aware. Is it the same from your own perspective? I mean, regulator has a helicopter view, but sometimes these things can be narrow and you can have different experiences. So, from your point of view, is it about 48 years old for you as well, based on the trends you see?
So for me, I don't have the data, but I can just oppose based on the data in the public domain. Like I said earlier on, the platforms that have come into the market, like Bamboos and etc. I mean, I think Bamboo has about 500,000. I don't expect to see the octogenarians there. So I'm most likely going to see youthful population on those platforms. But definitely, the existing base probably has a high number of 70-year-old, 90-year-old. So by the time you had those numbers, it's definitely going to bring everybody to the 48 that Madam have mentioned. But I think she has the right to give the real. She has the right to give the correct average age, to be honest. I can only just assume.
Okay, so that's going to be. I mean, PiggyVest is a lot of young people are very familiar with PiggyVest. What would you say your own experience is? Do you agree to like 48, or is it younger for PiggyVest?
So for PiggyVest, the target audience, like one of the speakers rightly mentioned, is the young, upward mobile people that are very interested in investing in very quick and easy ways, and which is one of the product offerings PiggyVest has put out in the market. At the click of a button, you can save, you can invest, you can do things very swiftly as against what the traditional banks have faced. So that is why, which is what is attracting a lot of young people. And we always say, the Gen Zs are not patient. Even we ourselves were guilty because, we're even murmuring that, time is of the essence. So everyone wants to do things swiftly, which is why you're seeing this sort of traction in the likes of Piggyverse and other people in that same sector.
Okay, let me still stick to you for a bit. I think, just as you mentioned, we've seen a lot of other people gravitating towards all this, newer mobiles. We've seen people gravitate towards the likes of Piggyverse, Bamboo, Trove, and Co. And even cryptocurrency platforms, I think, things that are aware of American. Why are we not seeing that level of interest in traditional
Okay, so there are quite a number of factors. The customer experience is not, is not, let's be honest, it's not as seamless, and it's not like a walk in the park. You still have to layers and layers of, yes, the capital market operators may boast that, okay, you can do things online, but there are still some level of paperwork, high level of documentation that you have to do. It's not seamless, and the Gen Zs do not have that time. Another important factor is the macroeconomic fundamentals. So okay, fine, we all look all nice and rosy in our suits, our skirts, but the macroeconomic fundamentals we are facing is also a very huge challenge for people to invest. Yes, you can say, oh, you can invest with as little as 5,000 naira, the FGN savings bonds, you can do mutual funds, but how many people really can afford 5,000 naira? Inflation is at 33%, cost of living is high, and someone that needs to eat, you are coming to tell the person that, oh, please come and, the person will look at you, that, are you joking? You're spending the bulk of your money on transport, food, and you're saying come and invest. So there are a lot of factors really that are affecting what we're not seeing. Then there's also lack of awareness and poor investor education. A lot of people don't know the sort of benefits that are in the capital market, and there's also a misconception, which is why we're here and we're having this sort of forum to demystify those sort of things, and to also, yes, encourage the younger population. And the regulators who have also been supportive, I won't take too much time, in terms of the initiatives. I mean, Madam Hafsat has said a whole lot, even the NGX as well. So it's all encompassing, and we, the stakeholders in the ecosystem, need to fight harder and do better. So I'm hoping that the next time we have this sort of forum, the sort of statistics we are seeing, at least the gap would have closed a little bit.
All right, there are two Daniels here. Oluloyo, that must be you, right? So I will come to you. You've heard her talk about purchasing power being a huge factor on, because of the macroeconomic conditions. So someone who earns a salary of maybe 100,000 or 120,000 probably spends 80% on that, on feeding and transport. So there's just little left for investment. Yet we still see a lot of them going to crypto. They invest in crypto, isn't it? So why is it that a huge part of our population, especially a young population, don't just see the capital market as a very interesting space to want to play in? Well, don't call it capital market. Maybe the equities market, fixed income market. Doesn't really just excite them. Is it too boring?
Okay, thank you so much. So good afternoon, everyone, and I'm glad to be here. So I'll talk about personal experiences a bit and try to make it short also because of time. So I'm a non-finance. I'm studying mathematics in UNILAG. So from a non-finance background, I can tell you for a fact that most of my classmates, not just in mathematics alone, but even across the Faculty of Science, don't know what they call FGM bond. Yes.
Despite all the work we do
We
at
can do a
Nairametrics.
Yeah. They don't know what they call FGM bond. They don't know what, some people don't know what mutual fund is. I think last week I had a call from a friend who's like a kind of proper tech bro. And I think the idea of students who have money, I think it's, well, not too true. That's the fact there, because most of these guys now do a lot of, freelancing and the like, and they have a lot of money. And I was talking about, someone told me about mutual fund. What do I think about it? And I'm like, yeah, it's a very good way because it's traveling very soon. I just wanted to put his money somewhere. So I would say there's a lot of, the part of awareness part, if students that we should say should be enlightened, don't know about, this kind of financial product and the likes, how much more going to places like Ajigunle, for instance. So one of the speakers mentioned something about bets, and I think that is this whole bet Nigeria thing. I think that's a very, very important thing we don't actually look at, because we say people actually having this part of economic challenges, they cannot eat, they cannot do these things, and you see a lot of boys out there putting money into taking, I think call it stakes or something like that, putting their money to these kind of Ponzi schemes and gaming things. So I think it's not really about the funding alone or just the macroeconomic challenges. It's about the part of awareness. And recently we've seen a lot of hype about financial literacy, but I think it's been more of banking the unbanked than actually educating people. So, for instance, now you see people going up and down talking about financial literacy. Instead of putting your money here at Joe and the likes, putting it in the banking system. And we've been forced because of COVID and cashless policy to actually use these systems. But that same way also, it doesn't happen for financial literacy there. How about going to secondary schools and universities and actually teaching them about, this is what the bond is. This kind of basic things. Like, you'll be surprised to know how much students are uninformed about these particular things.
All right, thanks for that. Jomiloju, is Jomiloju here? Is that you?
Martin.
Okay, Martins. Okay, so Martins, I would assume you're also a next gen investor as well.
Yes. Yeah.
Okay, so we've heard Daniel here speak, and let me also put you on the spot. Do you agree with some of the things that he said, and is there any particular investment preference for young people? Now, when I mean investment preference, is it that younger people have so much risk appetite that those of us that are trying to protect them via regulation are probably even doing them an incentive because that's not what they want? Is that really the case? I'll give you another example. Apart from crypto, we've seen a lot of investment in crowdfunding, particularly agro crowdfunding. And these people don't really have, it's not like they're that savvy about these things, but they get into it. So what is your preference, really, you young people? What do people want?
We want ease. My name is Martins Achakai. I'm a student of economics at the University of Lagos. In 1 month, I'll be done with schooling, so might as well call me a graduate student.
Not yet.
Yes, so to answer your question, I think when we look at young people, the first thing for Gen Zs is we want something that is fast, because there's a lot of things you want to do at the same time, and you don't want to spend 3 days trying to set up an account on any of these platforms that you used to invest. So I think the very first thing, not repeating what Daniel has spoken about, the very first thing is ease. You need ease in terms of setting up your accounts, in terms of placing your orders, not that you try to place an order. I'm talking from a personal experience now. I've been investing in the Nigerian market since as far back as 2021. I participated in the MTN offer. I've had shares even before then, but this is 2024. Sometimes I place orders, large volumes. They don't get filled. I keep trying. Days. A good example was with Gerigo. Yeah, when Gerigo came up and we wanted to invest. One of my analysts is here. I also manage the investment fund at the investment society, and so there are still some structural problems. Another problem I like to highlight is the KYC process. It's very, very challenging. So you fill an account, they say, oh, you've opened an account before, there's this information missing. You have my BVN. Why do I have to bring thousands of records just so I'm not active for a month, my account is closed? I have to start going back and forth. So ease. I also think that the design, financial literacy is important. At the investment society, for example, we've gone to secondary schools to do financial literacy. For me, we've invited companies. We even visited the NGX, took our students to the Nigerian exchange, all in the name of financial literacy. But I think that there's a lot more that can be done in that regard.
See, from experience, there's a lot more. Trust me. That financial literacy, your route you're going through is the very wrong one, but we'll talk later. Mr. Rufai, I'm sure you're itching to get into this conversation. You've heard feedback from our next gen, panelists here. And clearly their point is, look, it's probably not seamless enough for them. There's not enough education. And perhaps maybe the returns are not just, good enough for them. So, but I know the SEC has been doing a lot, especially from the financial literacy point of view, and even trying to make the market a lot more retail. For a lot of people who don't know, SEC has there's actually an entirely a crowdfunding regulation that SEC approved 2 or 3 years ago. I'm not sure a lot of people know that yet. And I think Nigerian SEC is also one of those very first regulators that, at least to a large extent, has a policy on a framework on cryptocurrency trading. Aside that, are there other things that SEC has done and plan to do to attract a lot more next-gen investors in the market?
Thank you very much. And I must say that I think this is the crux of why we're here. I'm glad, Martins, about the things you said. I didn't even know you had an investment site, and that's interesting because we've had a lot of engagements with Unilag at different times. We've had fora in Unilag, we've had online, and we've also had in our offices. We can't do enough of investor education. Knowledge is power. So it is true that everyone actually wants ease. It's not just the next gen, really. And some of us indeed are prepared to pay for comfort, if you have to pay for comfort. So you're right when you say you want ease. And that's why I said, well, in in the Identity Management Committee, one of the things we're working on is looking at the journey marks and trying to see how we can make them better. Investor experience is also another thing. So, I mean, I find it strange to hear that you have to update KYC after a month of transaction. That's really strange. It's not a requirement in the capital market. Maybe it was just an experience that you had, or maybe a glitch in that particular operator systems. But I must say that, whereas it is true that there's need to create ease and democratize access by allowing various channels for investments in the market, it's a delicate balance between that and risk management, as well as protection of the investors. We also have an obligation to ensure that our market is not a haven for money launderers. So there are regulations that we have to comply with. And I need the next gen to understand that. So when we say KYC, it's actually an ongoing process. So you have a KYC requirement at the onboarding stage, but the operator you patronize needs to continuously be in touch with you and revalidate some of your data. Because at any point what's KYC? It's not your customer. They need to know you. So where your name changes, for instance, or your address changes, or indeed your earnings change, because one of the things that they profile is your earnings capability. What's your annual income? And that's important for us. And I'll tell you why. So talking to the next gen, honestly, I know you like things very fast, but you need to take it easy, because we are trying to make the world a better place for all of us. And if we crumble it now, then there will be no world for you to live in comfortably. So if we don't understand your earnings capability and you begin to trade in amounts that are beyond what you should be doing, then we probably would wreck the market. So Nigeria is already on the gray list for money laundering. We've been working assiduously to get ourselves whitelisted. We're not even there yet, right? Despite all the efforts that the NFIU and the regulators in the financial services sector are making, we are still not whitelisted. That alone is a disincentive to investment by foreigners who understand the implication of being gray listed. Now, if we now say that we will not revalidate the data that we have on you, it puts us in a dark situation, maybe permanently or maybe longer than we should. Now, again, whereas you want that comfort, it's also important that you invest in securities that guarantee you some level of protection. So if speed is your number one ask, it might be a challenge, because people who lose their monies in politics, and I tell you what, those who steal your money make it actually easy for you to put money in their net. It's a very delicate balance. So yes, we also want speed. We are working towards making sure that our operators are competitive. Now, we can't legislate that transactions should be done within 2 minutes or accounts should be opened within a minute. Competition will drive us there. So we allow competition. Healthy competition. We play the ambit of regulation. And so it's not a monopolistic market. If one operator doesn't suit you, there will be so many others. The same way you have competition in the other spaces where you play. In the crypto market, even in the betting space. So betting is regulated. It is not capital markets are not encouraging it, but it is regulated. But again, you can lose money there. So if you are saying we are regulating to prevent undue loss, I think you should try to understand. But we'll continue to engage. Please come to SEC as well, or we can actually even come to you in Unilag and in other schools so that we can make the good news of the investment spread faster. Thank you.
All right, thank you. We heard from Zach there. I thought you should defend this thing very well. All right, so Mr. Aware, I have to come to you as well. I mean, you had a very insightful presentation, and I think I saw you speaking to sort of technologies we have now. Now, these days, we speak a lot about AI, cloud computing, and machines essentially aiding transactions. Now, how can we as Nigerians, very growing capital market, leverage on AI and all these technologies to one, sort of democratize investing, and then two, also aid the sort of financial literacy that he's just spoken to as well. Is there any role for AI and cloud computing and all this technology, machine learning for things like this?
Thank you. I think there is a statistics that says that by 2027, about 97 million jobs will be lost, and another 120 million jobs will be created. And who are the people that will lose their job? They are the people who have not aligned with the emerging technologies like artificial intelligence. And we tell people that AI is never going to take anyone's job if you decide to align with the capabilities of AI. So the future managers are the managers that are able to use AI to aid and make their job very efficient. So when you look at the capital market and you bring these emerging technologies like artificial intelligence, things like cloud computing, they all come with interesting capabilities that has accelerated digital transformation. For example, if you bring in cloud computing into capital market, there's a potential cost saving, because if you look at traditional businesses like banks that have invested in tier 3 data centers, they have to recruit resources, they have to leverage on infrastructure in Nigeria, etc. All those things, you really don't need them when you have cloud computing. That gives you resilience, it gives you scalability, and the benefits of disaster recovery comes with it, and yet you are not going to invest a lot of capex in going on that journey. So there's a huge benefit when those things are introduced by the operators, by the players in that ecosystem. We spoke about robo advisors. Those things are built on artificial intelligence capability because they are meant to look at data, they are meant to look at those data with the model and predict and recommend. So the advantage brings improved customer experience because you see all the next gen investors, they probably don't want to talk to human being. Maybe that's one part that I already didn't mention. Not just simplicity. They don't want to have interaction with anybody. They just want to talk to computers, get advice, and take their decision. If possible, they don't want to see anybody, and that's one of the things that is driving them. They just want something they can do on their own. Either they have experience and they don't have experience. So AI are things that could help customer experience. It could help in terms of educating, because today, even some of us with our level of experience over the years in this space, we still go to ChatGPT to learn some few things and now use our experience to take decisions, because that doesn't mean all the things it gives to you is right, but it gives you an idea of what you are looking for, and you can now guide your thought. So without speaking for so long, I mean, the value it brings in terms of experience, in terms of cost optimization, scalability. When you have cloud computing, you really don't need to care about am I running out of server? The system is automatically expanding, it's elastic. As your load is increasing, it's expanding. You are not worried about you are losing capacity, you are losing the strength of your infrastructure, and all the other capabilities you mentioned in terms of machine learning They help with looking at big data and do predictive analysis. And overall, when you now connect everything together with the regulators that are interested in your compliance, those are the things that will even make the market a lot easier. Because when you have big data, you have machine learning, the regulators can have an ease of compliance management, because those are the things they are interested in. They want to regulate the market to ensure that who needs to play in the market is playing in line with the policies, with the framework, not to stifle the market. So those things can help everybody interact. Thank you.
All right, thank you so much for that, Mr. Reno. We're almost out of time, but I still want to do at least 2 or 3 more questions before we go. Ori, I'm going to come to you in a bit, but let me ask Daniel this question. I just want to dovetail from the AI point. So for you young people today, and this question is particularly important because you have the regulator here, you have fund managers here as well. What do you guys use AI and machine learning for when it comes to investing? What is it that you guys do with it?
Okay, so I would say from the part of machine learning, basically, it's just like looking at, say, past history of things and trying to make informed decision. That's just the machine learning, basically. So then AI parts is just like, to answer your question, I would say it's sort of like making predictions. So predictions, for instance, now let's say I go to YouTube and I watch Brother Shaggy today, tomorrow, next tomorrow. Maybe next week, what's going to pop up from is, add towards that kind of same line also. That's what it does. So I would say where it can be useful, particularly in terms of like investing, is in the part of, let me say, advertisements, basically. So advertisements, for instance, for next-gen investors, for instance, like you don't probably see them reading newspaper. And I mean, because there's part of, you can say these things are not out there, but they're actually out there. A lot of firms do a lot of research, you understand, and economic outlook and the like. So why are investors like undergraduate and even recent grad not actually looking at these things? It's a part of where are they, let me say, where do they spend their time mostly on? So if you're looking at an average next gen person, it's probably on Instagram almost all day or TikTok. But when our news is just on, emails, and I have to go to a particular site, a news site actually, to go and look at what's happening in the Nigerian economy. It's not going to, if I'm not going there for any interest, I'm not going to see these things. So how can we be more, how can we as finance firms be strategic about our campaigns? I think that's something that's very important. And these AI tools already, like, if you pay Instagram ads and the likes, they're actually going to bring out what you're going to see. So if I'm going to look at Brother Shaggy on maybe Instagram, for instance, how about using those kind of people? I know, most financiers are very conservative and will not want to put just any kind of person out there to represent their firm. But how about the ones that are decent a bit? Use them to push financial literacy. People would actually say these things more than going to emails to go and read what they're not really interested in.
Interesting point. Martins, let's come to you.
Okay, so one thing I would like to add, this is a bit from a technical perspective. I think we need to introduce an open API policy in Nigeria, or an open data policy. So, for example, if we want people to adopt things like machine learning, artificial intelligence, we need to ensure that the data is accessible. So data on the Nigerian exchange, for example, is not easily accessible to me. I can log into ARM, I have a brokerage account, I can see it there, but I can't import the data in my Python notebook because I have worked on a project and I needed that data. I wanted to build an algorithm that does XYZ. But for the US market, just with 3 lines of code, I have this data available. So that's one thing that we can also do. If we democratize this access, we don't just limit it to, the fund managers. People can innovate on this. You see, like if you go to the SEC website for the US, you want to get 13K filings data, for example, you can download it. Right? You could also get that for Nigeria, but what has happened is that people have taken that open data and they built product on top of it that you don't have to go to the SEC website. You can just import this data. That's one. I think that's a very, very important thing that we need to pay attention to.
Very, very interesting point. You want to weigh in as well?
So about what you said, actually, I think that part is very important because, when I was working on my final year project, so I'm working on option pricing, which I already do Nigerian markets, but at some point I had to stop. So what we had to do, because we needed another project we wanted to work on, which is Falling Knives. It's a project we were working on with both Unilag and League University in US. So what we had to do is, Martin's aware about it, we had to speak to one of our friends, Ambrose, to actually like build a package to access Nigerian
To scrape
information.
data.
And that was very, very frustrating. So that part of data access, I think it's a very big problem there. Like, we faced that problem together. And
Faced that
we had
couple
to
of
find a
times.
way around, building a particular Python package just so I could actually access Nigerian information.
Interesting insight. You guys just opened my eyes to a lot of things. You see, that's why it's good to always speak to next gen people, because you tend to see that their own thinking. You think they don't really know much, but they know. Imagine him saying 13K. That's the filing in the US for those of us who invest in US stocks. So we quickly close now, but we'll close with you, alright. I want to go back to the very thing, one of the first things you said, and I think is very important, and I want everybody here at least to leave with some kind of insight from you. Today, we are in an environment where interest rates is at 30% plus, inflation is over 30%. You've seen treasury bills now, true yield is probably closer to 30% than ever at the highest level. We also heard the stock market, I think it was his presentation, stock market is up 30 something percent. I think everything is 30% in Nigeria these days. So from your own, perspective, what you know, perhaps what you want to suggest, what should young people invest in? Should they invest in the equity market? Is this the best? Maybe he's telling us it's not the equities market. So should it be the equities market? Should it be fixed income? I mean, based on where Nigeria is today, what would you suggest? Let's close with that.
So it will have to be a mixed bag. I can't say, do equities or do fixed income. It also depends on your risk appetite. How much risk are you willing to take? For the equities market has done well, and it's also meant to be an indication of the strength of the economy. Though things have been a little bit quiet, but we expect to see a bit more traction with the banking recapitalization exercise. And the NGX has also come up with this digital platform that will also help to encourage automation. So the sort of experiences we are seeing, that maybe it will take 3-4 days to do certain things. No, so in terms of KYC automation, doing public offers, a lot of things will be automated, which would also help to encourage the next generation. Then again, the fixed income market too is also there. Even in terms of, because we shouldn't assume that everyone has so much money. Even we are, I'm sure, I hope most of us here are aware of the like FGN savings bond. You can get double digits. So, but what I would advise, don't put all your eggs in one basket. Let me just keep it simple. Have a well-diversified portfolio. And even when you're investing, Gen Zs, with all due respect, they think they know everything. Mrs. Hamsat said that just even still try, you can even get mutual funds where the fund managers are experienced, they have the expertise, they will handhold you. Don't put all your eggs in one basket. So you can have a very good portfolio blend. You have a blend of fixed income, you have a blend of equities market. So when there's even a downturn in the equities market, your fixed income portfolio can even, save you. So it should be a well-diversified portfolio. And please seek advice from trusted sources. Don't forget the thin line. Whenever, no matter how simple the product is, always seek advice from your lawyer, your solicitor, a trusted financial advisor, and make sure the person is registered. It's very important. A lot of people don't know. Go to the SEC website, just type the person's name, the name of the company. You'll be able to discover if the person is registered or not, if the person is defunct. Just a few days ago, the SEC, or recently, the SEC put up a disclaimer about a particular investment. I'm not going to mention, but if you go there, you will see. You do it at your own risk. So let us, in as much as we want to make money, let us also take the pain to do things right and do our own research. And I wish everyone all the best as they do things right.
I will not let you go. I will not let you all go if I don't put Mr. Ware on the spot as well. Mr. Ware, I have 1 million naira and I also have $3,000. Where should I invest it? US market or Nigerian market? Don't you like that question? I know his regulator is here, so he's going to be very careful.
I am a Nigerian first, and I'm a patriotic.
I thought they say money does not know have a loyalty.
And we all believe in Nigeria. and I will recommend you invest in Nigeria.
Okay, fantastic. Please give me a round of applause. All right, so we end this amazing session with a closing remark from our super regulator herself, Mrs. Rufai. So, any final words for everyone here today? Oh, are there questions as well? Oh. Okay, that's cool. So, I want to help us. Our esteemed panelists are willing to take a few questions. So, because their time is really up, but let's just indulge. Please give. There's somebody at the back there. Just give him the mic.
Thank you. Good afternoon, everyone. Yes, I want to first, Mr. Gundre, it's nice meeting you.
Thank you.
I'm a very ardent reader of your Nairametrics, and I simply can easily say that you are an authority in your chosen markets. Thank you for being here.
Thank you. Thank you so much.
My question is, unfortunately, I happen to work with a group of people who invested a lot of money somewhere. And this is huge, very huge amount of money. And I think this is a fallout of the fact that the investment ecosystem in Nigeria is not as publicized as it should be, like we have said here several times today. This is, these days, this high-yield investment program comes in and go, mostly from non-Nigerians, especially from other African countries. And I would not like to mention them, but there is one that has gone away with Nigerians' money in billions, several billions of naira. And I've had to work with a committee that was constituted to help to see if this money can be recovered. And I've spoken to individuals, especially a couple, who put in excess of 1,250 million naira into this particular investment. I've also heard from an individual who told me there's actually an elite investment section in the same program, and it will cost $60,000 for a package. And they came together and took 6 different packages. That's $60,000 times 6. And I've also been, I don't know whether to say unfortunate, spoken to someone who said he just borrowed $200,000 from his father-in-law and put into this program, and he didn't get a single ROI when the thing crashed. So I've also spoken to a group of Reverend Fathers who put money that was supposed to be for their children's education in the US with a view to getting returns.
Reverend Fathers have Jackpot.
Yes. And they were convinced by somebody who had put money in that same investment and collected ROI for 1 straight year. And they thought that, okay, if I put this amount of money, I can do this within 3 months, I can make my money back. And they didn't get a dime until the program crashed. There are many programs like that. Now, I will tell you that some of the victims of these particular programs are across the African countries, South Africa, Ghana, Nigeria, Kenya. And I spoke to somebody in South Africa, one of the people leading the recovery team in South Africa. He said when they joined this particular program, when the owner of the program saw that they were South Africans, he quickly called them and gave them back their investment and blocked South Africans from investing in that program. When I asked why, he said because there's a law in South Africa that protects their citizens from online scam. Now, I spoke to somebody in the Francophone nations, and he told me that they have all forgotten about that money because their countries do not protect them when they put their money in anything online. So I want to ask the Madam Sek, somebody I've met on a personal level on a different platform, and I'm surprised that we still met here again. That is there any way that the Nigerian government, want to protect Nigerians from online, because Nigeria is a prime target for swindlers. This is something you have that we can call a capital flight, because the money that should have gone to the Nigerian capital market to function as equity fund for Nigerian companies, yes, or money that should have been in the bank to serve as credit capital for Nigerian banks, and going into other nations and going into the hands of swindlers. So is there a way that SEC wants to protect Nigerians from falling victim of these programs? Thank you very much.
Thank you. So, first is, you heard what Ora said, invest in what SEC registered. That's the first protection you have. So I'm sure that that scheme you mentioned was not registered by SEC. Now, online transactions, there's a lot of challenges with them. So if you take registration or confirmation from SEC as the baseline, you won't fall into those things. Second is the efforts we are making. You see that we put out a lot of disclaimers on our website. Oftentimes, when we see that there are offers that we don't know, right, or that are unknown to us, so we put out disclaimer against Binance last year, I believe. There's a disclaimer against Alpha Trust Investment Club right now. We did Yongdong, we did Dangote, no, not Dangote, Dan Tata Success, so many of them. MMM was one of the famous ones in the past. Despite all those disclaimers, Nigerians still invest in them. So you would say that we do our part by enlightening people. We do our part by putting out disclaimers. We also partner with NIDA or NDPC now on bringing down, or even indeed NCC sometimes, on bringing down sites of some of these illegal entities that try to raise funds from the market. So there are a lot of things we need to do. Sometimes we get involved with discussions with Facebook and the likes of them on the need not to allow certain adverts. At the moment, SEC is on the Advertising Standards Panel of the Advertising Regulatory Council of Nigeria to disallow advertisements of schemes that are unknown to SEC or unregistered by SEC. So we are doing a lot of things. But chief amongst what you need to know is that you need to first verify whether an offeror, that is the operator who is trying to market you, and the scheme that he is marketing are registered by SEC. If any of them is not, then don't patronize them. So to be forewarned is to be forearmed.
Right. So I think just to also add to what she said, I've always thought that if this was 20 years ago, I would have said, maybe there's not a lot of information out there. But we live in an information age, and there's so much information out there to make it clear to people to distinguish between what is a real investment and what is a clear fraud. There's just so much out there. It's just vast. What I've tend to also found out, even from my own experience, is this is really pure greed. It's not really about information. A lot of people who go into these things just want quick money. So there's no amount of warning you give them. They even, in fact, if you interview them closely, because we've interviewed several of them, they actually know that it's a Ponzi.
Yes.
But I think the design of a Ponzi is that somebody ends up losing. So you hope it's not you. So you just want to go in. If you ask them and say, make a joy enter, come out. No, I know now. Make a joy enter. Come out first. And then when they go in and come out, they will tell the whole world, oh, I put 1M here, come out 5, man. You too, you hear and you say, you want to do your own too. Try. Just hope, say, try. But if your money lost, don't call me. Oh. That's usually how it works. This thing is all psychology. And then it starts to grow on. And then when they lose a lot of money, the famous one, sorry not to take your time, was the one of, I think was a guy who took money from a lot of people, and he claimed he was doing a microfinance bank. The first time I heard about it was a neighbor who told me, who is a very savvy guy. He's even he's an actor, and he says, there's this guy he does microfinance, more. I give that guy 1M every month. I get like 200 to 50K, clean money and all that. I said, what kind of microfinance bank gives you that sort of return? He says, the guy has his model sorted out, that he just lends money to market women, he knows them, registers them, the technology is super. I say, boy, it's a lie, irony. There's no person that will give you 25% monthly. That person does not need your money, trust me. And behold, it was some guy that took a lot of people's money. He started quite well, but because he was expanding too much, he didn't know how to tell them it was not a Ponzi, and started paying them back their capital. So the more capital he was getting, the more returns he was paying people. It could have gone on forever. Unfortunately, COVID happened, and then the money stopped coming in. And so the guy, already his wife and kids already left. He was trying to jackpot. Eventually, he actually left. They couldn't find him. But Interpol finally caught up with him somewhere in, I think, Senegal or one of those countries. He's back in Nigeria now in prison in Abuja. But all the investor money is gone. And this is billions I'm talking about, not small money. Even banks lose money like this too. So please, just let's be very careful. This is not about SEC or me because Madam is. It's not SEC. It's just pure greed. Based on this, I want to thank everybody for being a part of this session. Thank you to the panelists for being a part of this session, and enjoy the rest of your evening. Thank you so much.
Thank you.